The Mar-a-Lago Accord. You've almost certainly been hearing a lot about this lately, and it does have a direct effect on a lot of what we've been talking about with what's going on with gold prices right now. This directly is related to some of that. So we're going to get into it. This is so significant in so many aspects of the economy. It's going to affect you directly. It's going to be very important. Let's get into it, and I'm going to keep it really basic and simple. A beginner's guide to the Mar-a-Lago Accord. And I please humbly ask you to click like. It helps people like us help more people like us. And you know for a fact, nobody is seeing this coming. This accord is just simply very similar to what you've seen over the years in the past. Decades ago, there was a Bretton Woods Agreement, there was the Plaza Accord. This is just the latest concept or iteration of a restructuring of the entire global financial system. It's a mix of foreign policies, financial engineering, and debt restructuring, and it's aiming to boost American manufacturing. While, now pay attention to this, while weakening the dollar, making it more competitive against our enemies, Japan and China, other countries that are producing things a lot less expensively. They have a lower workforce because their dollar is devalued. The Mar-a-Lago Accord is just a mix of foreign policies, financial engineering, and debt restructuring. And what it's doing is it's aiming to boost manufacturing in America. It's also trying to get the American dollar to be less valuable. Now pay attention to that and think about it in terms of everything we've talked about, especially with gold prices, since they were over $1,200 an ounce less when I started telling you to buy it. The Mar-a-Lago Accord is also aiming to reduce the overall American debt. And I have to give credit where it's due, because this has been one of the biggest issues that I've seen for decades now about the American economy and how it's definitely going off a cliff here. No one's pulling it back, no one's stopping it. And this disruption is maybe the thing we need right now to actually get our feet beneath us and take a breath and figure out what we're going to do about this incredible American debt bomb. Donald Trump has promised to deliver a golden age that will include a renaissance for American manufacturing and exports. And he also has long-standing concerns about the size of the U.S. trade deficit, which hit a record of $1.2 trillion in 2024. And he says this is just a wealth transfer from one nation to another. And he's exactly right. With this deficit, all you're doing is sending more money out to the East and out to Europe and out to South America. You want to have a positive trade balance where you're selling things to other countries, making money from that more than you're buying from them. And a lot of this talk about revaluation of gold all started when Scott Bessent, the Treasury Secretary, mentioned that we would monetize some of the American debt. And one of the ways to do that would maybe potentially and logically be to revalue gold, which is on the books right now for about $42 per ounce, even though it's trading at closer to $3,000 an ounce. President Donald Trump's aggressive plans to shake up how the U.S. trades with the rest of the world have fueled speculation about the potential for a grand multinational bargain that would deliberately weaken the dollar, helping American exporters compete with rivals such as China and Japan. And notice when I say certain phrases such as deliberately weaken the dollar. And what do I tell you about the revaluation of gold? That's just a devaluation of the dollar. And that would actually be the exact same thing that we're talking about here with the Mar-a-Lago Accord. The Bretton Woods Agreement in 1944 is just a bunch of countries who have the power get together and they make a decision. So you had countries like United Kingdom, West Germany, America, and a few others just say, okay, now we're all doing Bretton Woods, which is what established the US dollar as the world's reserve currency. And then in 1985, we had the Plaza Accord, and the purpose of that, again, was to weaken the US dollar. A lot of nations have a lot of debt owed to America. It's really problematic to pay that debt, especially when the American dollar is strong, and they're manually forcing this dollar to go lower for the benefit of not only America, but other countries worldwide that agree to it. Much of the attention is focused on a paper by Stephen Moran, Trump's nominee to lead the White House Council of Economic Advisors. In this letter, Moran laid out possible policy options for reforming the global trading system and fixing economic imbalances and widening trade deficits, driven by persistent dollar overvaluation. When the US dollar is strong, it actually undermines the ability of America to produce goods for the rest of the world. That's why we don't have manufacturing here, but we have it in China, Mexico, Laos, India, Some analysts view the dollar today as overvalued based on economic models that look at things such as the domestic purchasing power of a currency. And you know that the US dollar has lost 98% of its purchasing power since the formation of the Federal Reserve. The overvaluation and its effects mean that Washington has an incentive to reach some kind of deal with other nations that would address currency strength. You see, it's a bunch of nations agreeing that this is how we're going to do it now. This isn't organic at all. Nothing wrong with that, but I'm just saying it is some people who make what they think is the best decision at the time, and maybe it's the best decision. You don't know, but they're going to make that decision. In 1985, a group of governments agreed to the Plaza Accord, named after the New York hotel where officials met, against a similar backdrop: high inflation, high interest rates, and a strong dollar. Although we don't have as high of interest rates as 1985, but everything else is similar. And the deal was reached between America, the United Kingdom, Western Germany, France, and Japan. That's all it takes. Can we get 5 countries to all agree to this, and then that happens? As long as America is one of them, everybody else goes along. The pact was made on the basis that the greenback's huge move higher was damaging the global economy. And that was at a time when Volcker's got interest rates going through the roof, and then you have Ronald Reagan coming along and unrolling a big expansive monetary policy. All of this made the US dollar very strong in comparison to a lot of other currencies, which puts a lot of problems not only on the other countries to pay back debts, but also in terms of America's own ability to export products. There's been policies outlined that are going to weaken the dollar, shift a lot of tax burdens onto other countries, while restructuring the entire debt load. It's basically a full-scale financial realignment, which I am all in favor of. I cannot believe it took this long. I'm so glad we're here now. We need to shake everything up. We have to be a disruptor with the global debt. Our entire economy is 70% based on consumption, that you as an American are going to go to the store and buy something. But a lot of the tariffs are kicking in tomorrow, by the way, so that might make avocados cost you a little bit more. It's argued that the plan is going to revolve around 3 specific pillars. Tariffs being used as a source of leverage, but it's also a source of income from taxation. They also discussed setting up a U.S. sovereign wealth fund, which is rare because since we have a big ongoing trade deficit, and they're also talking a lot about a big debt restructuring to absorb a lot of the debts that we've built up that we cannot afford to pay. And there's tariffs kicking in, some of them tomorrow against Canada, against Mexico, against Europe, against China. I don't know if they all kick in tomorrow, but who can keep up with this stuff? But at first you think maybe it's a standard trade war like we've seen before, just a really big one. But it's just part of a bigger picture. This is all part of this big economic restructuring. Now listen to this paragraph here. This is so interesting to me. This aligns with Trump's America First economic approach. Instead of raising taxes on U.S. citizens or cutting social programs, his administration is looking to fund the government by taxing imports. And once again, listen to what I just said there. Did you catch it? Instead of raising taxes on U.S. citizens, the government is going to tax imports, which are paid by American businesses and American citizens. So it's a tax that they're not calling a tax, but it is a tax. Just like inflation's a tax. It's the unspoken tax. But in terms of sovereign wealth funds, you're usually going to see that through a country that has a trade surplus. Countries with sovereign wealth funds are more like United Arab Emirates, Norway, Saudi Arabia. But where's all this money going to come from? And this is where it all started. Scott Bessent mentioned that we would monetize the U.S. debts. And part of the ways, one of the most logical and simple ways to do that would be to revalue gold. And that's what started a whole big conversation on that topic. U.S. gold prices are still on the books at $42.22 an ounce. But if you revalued it to mark-to-market $2,900, it won't actually increase the value of gold, but it would increase how much space there is on the American credit card. If they revalue gold higher than that, that will really push up gold prices and gold mining stocks. If revalued to the market price of around $2,900, it would create nearly $900 billion in new equity overnight. That'll fill a lot of potholes, pay a lot of teachers. It would give the government a new pool of capital without borrowing more money or printing dollars. But then listen to this part though. It's not just gold. They might not do it. I think they should, but they might not. But they also could sell federal land. In other words, even if they were to liquidate or sell confiscated cryptocurrencies. I'm against all of that. If you think about it on a personal level, if you are drowning in debt and you say, okay, well, I'll sell my car and my TV and my coffee maker, yeah, you'll generate a few dollars to go against your debt, but then are you better off, or are you just kind of like in trouble then? But the logic is pretty solid, where America owes trillions in debt that could be partially satisfied by selling off some of these assets. It's basically a backdoor way of draconian measures that you saw a lot of this happen in Cyprus and Greece over the years when they were having a lot of trouble. But by putting the assets to work, Washington could create new funding sources without adding to inflation or increasing taxes. I'm all for that. Of course, though, it's widely known anything artificial is a temporary thing, and the confidence in the American dollar will only decrease the more they have to monkey around this stuff. And a lot of this is involving defaults. They're saying, we're not going to pay that, or we'll pay you less. Or the big one now is these forever bonds, where they say, basically forever bond, they say, okay, you can buy $100 million in a forever bond, which pays no interest. You don't get any coupon payment. And in 100 years, you get back your $100 million. But so what they do now is they sell it to you for, say, $90 million. You put in $90 million, give to the American government. American government doesn't do anything. You get no payments until 100 years. None of us will be around then. Problem solved. But no matter what level of financial engineering we get into, it doesn't actually pay the debts necessarily. The money coming in from the forever bonds could be used against the debt. But besides that, we're moving a lot of things around to try things. We're doing a few defaults here and there. And at the end of the day, if you owe a debt of $100, you still owe $100. But they just devalue the currency. It's easier to pay back that $100 because it doesn't take as much. It takes as much nominally, but the value is a lot less. It's the same thing if they devalue the currency by revaluing gold. They're just saying that the currency is less valuable than we're pretending it's worth. And confidence is what all currencies are all about, especially in the days of fiat currencies. It's just an idea we agree upon. You give me $20 US, I know that I can use that somewhere else to buy about $20 worth of stuff in America. That's confidence. Right now, the administration is considering a foreign debt swap, and they're going to compel a lot of these nations that we owe money to. We're going to compel them, say, we're not going to pay you when we said we're going to pay you or how much we said, but you expected to get your bonds cashed out in the next 10 years, 5 years. But you know what? Now you can wait 100 years, and we'll pay you back then. That's a default. It's a default no matter how you look at it. The idea would force U.S. allies to absorb portions of American debt in exchange for continued military protection, which would also involve swapping existing foreign-held U.S. treasuries for these new 100-year, non-marketable century bonds. These bonds, once issued, would not be publicly traded, meaning they would be locked away in foreign central banks, removing them from the global debt markets entirely. The benefit for the U.S. at least is that less treasury supply would be in the open market, and that's going to push interest rates lower, which will ease debt pressures. The higher the interest rates, just like you with your credit card or your auto loan payment, the higher the interest rates on your mortgage, you pay more in the carrying costs. If you lower the interest rates, then it's a lot easier to pay those obligations. The risk, however, is that if allies refuse to participate, Trump could withdraw U.S. military support or impose additional tariffs, which could cause any number of economic rifts between different nations. And the bigger risk being that if nations are forced to absorb some of America's debt, it'll definitely undermine confidence in American treasuries. But I just got to say something here. If there's any nation worldwide or anyone worldwide that still has the same level of confidence in U.S. treasuries, then you're not paying attention to the right stuff. We are clearly in a financial conundrum, and I'm so glad to see that at least someone's doing something about it. Whether it works well or not, I don't know. I have my opinions, you got your opinions. I'm just saying the option, the other alternative, was to just keep on doing what we're doing. If you just keep on doing what we're doing. It's just getting worse and worse and no one's doing anything about it. I gotta say, I've wanted somebody to deal with this for the longest time because there's so much quality of life and happiness that will come out of dealing with and taking the bad medicine to deal with the American debt. The Mar-a-Lago Accord is quickly becoming a reality. We've got a lot of pressure on the NATO members. Tariffs are being implemented to raise money through taxation, as well as to encourage certain actions among the nations being tariffed. And there's all these options of how we're going to deal with the debts. Washington is finally discussing new ways to manage its $36 trillion debt load. A weaker dollar could increase U.S. manufacturing, make the debt loads easy to deal with by reducing financial burdens and borrowing costs. And a sovereign wealth fund could unlock a lot of financial flexibility. So you see, it's not one thing. It's not tariffs. It's not NATO needs to pay their way. It's not monetizing gold. It's all of this together. We're playing chess here, not checkers. But there are risks, of course. Tariffs could fuel inflation. The pressure on the NATO members could cause a lot of military rifts. All this financial engineering could spook investors, as I think it should. And a NATO-based debt swap could shake confidence in the U.S. treasuries among global players. They're hoping to reshape the financial system, and I applaud them for that. They're hoping to do it without breaking anything. It's too soon to know whether or not this is going to go horribly badly or very well. But historical precedents, which I lean on a lot, are Bretton Woods, the Plaza Accord, and those all actually did stabilize the global economies to a certain degree. It helped out a lot of nations that owed debt to America, which, by the way, will be released into the wild as they need less of it. They're going to release it in the wild, and it'll eventually find its way back to America, which will fuel inflation extremely. The Mar-a-Lago Accord, however it works out, it is the time to do this, even if it might not work out well. We definitely cannot stay on the same trajectory. We're driving to the edge of a cliff, and it's clear, and I've been talking about it for so long, and you can see the cliff, and you know you're going to go off the cliff. So we either go off the cliff, or we try something else, and maybe it works. The Mar-a-Lago Accord may be that exact thing. You'll hear a lot more about the Mar-a-Lago Accord in the next few weeks, months, and it's already starting to be implemented in some ways. And if you want to keep an eye on all this, please become a Peter Leeds Insider so that we can have direct contact with each other and a bunch of other bonuses too for a couple of bucks. Because this transition, which needed to happen, is now happening. All the rules of the financial markets and financial assets are going to be shaken up. And then all this chaos, I always tell you, in the chaos is where the biggest opportunities lie. There will be a lot of moves you can make now, and that's why you want to be in touch with me, because a lot of moves you can make now that will really help you going forward financially, help you protect the people you care about, and make sure that you land on your feet on the other side of all of this coming commotion. Whether you're in favor of it or not, it's going to be a lot of commotion. And hey, you guys have been asking me about clarifying the difference between Peter Leeds Insiders and the Peter Leeds newsletter. We did that now at peterleeds.com on the main page. You can see everything laid out right in front of you. It's totally clear. You got any questions, just ask me about it. You can see the different options that we have to help benefit you right now.